Okay, and we're live.
Hey Travis, how you doing?
Good, Ron. How are you?
The funny thing is, when I go to a restaurant, oftentimes like they ask for a name for the order, and I almost never give Roy. It's like Ron, Rob, Bob is very common. So,
Yeah,
but
I,
yeah, good.
I put generic white people names like I put Sam or Ben or like something like 4 letters or under, like Jack or John, and they still manage to mess that up somehow. So,
How hard
um,
is it to mess up Travis?
oh, dude, I've heard so many variations of my name that's not even close. And yeah, I mean they've messed up Sam before, so you know,
Oh yeah. So tonight we've got there's a lot of news. We're not going to get through it all tonight. We're going to cover some SoFi. We're going to look at maybe some stock price action
yep.
if you guys want. I don't know, but we'll talk about that. There's a lot of Tesla and Elon Musk stuff that's related, and we're going to talk maybe a little bit Bitcoin as far as a strategic reserve. There's some news from HIMS. There's some news from PayPal. There's some antitrust stuff from Google. Where do you want to start, Tevis?
I think we can start with. Let's not start with SoFi because just while people pile in.
Why
Um,
do you hate SoFi?
why do I hate SoFi?
Why are you so bearish?
I mean, I think SoFi is like, it's weird. I was thinking earlier today that SoFi is just this like steady constant in my life. Like I'm married to SoFi, but HIMS is the thing that I'm like really excited about right now because it's just so much more volatile, I think. And every day is way more interesting because of how it reacts to news. And I'm seeing way more pieces of news around HIMS than I am around SoFi. And so
Oh yeah.
it's just partially, I guess, because of the price action too, right? Because I bought heavily on Friday and then it's just bounced since then. Um, so it's not that I hate SoFi, it's just that I'm diversifying my interests. And yes, this is the truest statement you're going to hear all night. I love
So
the volatility.
So since you hate SoFi, let's talk Palantir just a little bit, and I'm serious.
Oh my gosh.
Throw this up. So have you seen this before?
Yeah, I saw this tweet. He got in trouble. He like deleted this immediately, didn't he?
Yeah, and it has a blue check mark, but I am seeing bots with blue check marks. So blue check mark doesn't mean what it once did. It doesn't mean that this is for sure Alex Moore, but he's on the board of directors for Palantir. Palantir, of course, announced last week that they will be moving from the New York Stock Exchange, which they did the DPO on, most likely because they just work better with DPOs. DPOs are pretty rare. I think they'll be a little more common in the future just because Palantir's was successful. But they're moving over to the NASDAQ. And, being on the NASDAQ, being a tech company, it always makes sense. And that's fine. Of course, that causes some institutional investors to buy, and their institutional percent went up massively. Like if you think SoFi went up a lot, like it has nothing compared to Palantir. And it's not all just because they joined the S&P 500, but that is certainly a lot of it. So this, says, for those that are just listening, we are moving Palantir Tech to NASDAQ because it will force billions in ETF buying and deliver tendies to our retail investors. Player haters, beware that we've been hated for decades, plural. Everything we do is to reward and support our retail diamond hands following. Tevis, real or not, and does it matter?
Um, I don't know if it's real or not, man. I don't follow the company. Does it matter? You know, if there's repercussions for this guy, then yes, but not really. Also, I just get weird vibes because it gives me flashbacks to 2021 where these companies were like so focused on just pumping that stock price and they were usually like, you know, the Nicolas of the world. I'm not saying that Palantir is like that. I'm just saying that by focusing or diverting the attention to these types of things and using terms like tendies and diamond hands and like the Wall Street bets lingo, I just don't think that's a good look to be associated with any company, right? Especially a company that's done like 600% or whatever it has in a year. It's just like attracting a crowd that is instant gratification. Um, and I just think that for the long-term holders, it does them a disservice because they're actually focused on the underlying fundamentals and the growth and actually being there for a long period of time. And you just get this influx of people who are just looking for a quick buck, who will probably buy at the top and lose money along the way.
So it's interesting. Alex Karp himself, he does not talk like a normal CEO. He's PhD in German philosophy. I forget the exact name of that, but he does use the word tendies. He does talk about like loving to trap short sellers and all sorts of like kind of far out there stuff. And it's just his personality. It's the way he is. But Alex also during the meme craze when Palantir DPO'd, it went from 10 to 45 real quick. And he said, hey, the stock is overpriced. Of course, Elon Musk is the only other CEO that I know that would say something like that. And it tanked, but he's like, hey, it's overpriced and you shouldn't be in Palantir if you're expecting quick money. It's going to take a while to play out. And it scared a lot of people away. People were thinking of it just as a meme. I'm skeptical of this being real. I don't know. Like usually Palantir has been pretty quiet as far as that sort of thing, especially on Twitter. They've been changing it, or X. They've been changing it a little bit, but nothing like this. So I'm guessing it's not real. And technically, if it is, like whatever reason you're moving over to the NASDAQ, it's fine. There's been a lot of insider sells, but that's part of Palantir. So Matt knows all about that insider selling. He's an insider, and he's not selling though.
Yeah,
Not
Matt, come on the show, Matt. But Roy, that reminds me, like, again, we don't know if this is real, so I do want to give the benefit of the doubt to this guy who is, I think, on Palantir's board.
Yeah.
Because it just reminds me of like, Elon's the only other person that does this stuff. It's like, yeah, well, Elon got in trouble with the SEC multiple times. We're going to take Tesla private at 420, funding secured, that whole thing. That landed him like in hot water. And so, again, the sort of moral standpoint of, hey, you probably don't want to associate this company with this kind of crowd. And then you have the legal standpoint of, hey, this opens a room for some manipulation of the price or all kinds of, nefarious things that at the very, very minimum draw away from the actual purpose of your company or the fundamentals of your company.
Speaking of professional, can you throw up the slide that I showed? I want you to your opinion on how professional looking you think the thumbnail is for my video.
So this is yeah.
Pretty professional, right?
Yes, it is lovely. It's gorgeous.
So since you brought up SEC, like one of the other things that's kind of interesting, especially after Trump election, is looking at some of his cabinet appointments. And we won't look too much about that, but one of those has a large implication for a lot of stocks that we follow, we track, we enjoy. Well, I guess there's really two there, but we won't. I don't think we'll talk about RFK Jr. tonight, maybe in the FDA, although that is relevant to HIMSS.
Oh, I do want to talk about this at some point, so I'll make a note of this, and then we'll circle back because I do have some things that I want to chat about with regards to Celsius, but I'll add it to the docket.
So let me pull up the Bitcoin chart. And one of the reasons why Bitcoin is pumping is because it's Bitcoin and it just does that. But a big part of it too is the implication of having somebody other than Gary Gensler as SEC chairman. Gensler, and I have a video on this. We've talked about this before, but Gensler has talked about he's basically anti-crypto. He really is. He's not like many of us thought that he would be. Bitcoin is, of course, up massively year to date, 117.45%. And it continues to run. It, just very recently set an all-time high. I don't think this will be the all-time high even this year. But, no telling. It could go back down to 75,000 in a second. But one of the reasons why it's running is that Gary is being fired on day one, according to Trump. And have you seen some of the names that are circulating as far as who's being considered for this position, Tevis?
Yeah, I mean, I don't know any of them because I don't follow U.S. politics that closely. I know the main person, the commerce and tariff guy, Lutnick or something. He was apparently super pro crypto. There was also rumors that Trump was talking to Brian Armstrong privately, which pumped Coinbase stock, I think, on Monday or on Friday. But all the candidates right now that are being floated are all super friendly to crypto, which is obviously great for the space as a whole. You're on mute. Mute.
Oh yeah, Dan Gallagher, chief legal officer of Robinhood. He's another one that's being considered. And then I saw today, I don't remember her name, but she is a crypto lawyer. Like basically, I think especially with Vivek being there and being influential, and RFK, honestly, like he's been very pro Bitcoin. Trump is as well as far as crypto and regulation. And so whoever we get in there, like a lot of names that I don't know like real well, but I know enough of like where their stance is on equities, where their stance is on crypto. And of course, hopefully, whatever it is, just very, very clear, transparent, fair regulation on crypto, which it's needed that for a long time. And the best thing is like that kind of certainty, the market loves certainty. It doesn't matter if it's a meme coin, if it's Bitcoin, or if it's just a stock. And so this is going to give, I think, a lot of certainty and clarity. Now, the other thing that's happening with Bitcoin, I should just share my window. So I'll do that.
I also want to just play this clip. So maybe I'll just do that on this new appointment. I haven't vetted this video, so hopefully it's fine.
Demonetized.
It should, well, it will probably get demonetized, but that's, I think, fine. So let me know if you guys can hear this.
Elect has now chosen his nominee for Commerce Secretary, Howard Lutnick. He's the CEO of the brokerage and investment bank Cantor Fitzgerald. He was on stage with Elon Musk at Trump's Madison Square Garden rally. Musk apparently advocated for him. The Commerce Secretary will have a key role in carrying out Trump's plans to raise and enforce tariffs. Lutnick has spoken in favor of wide-ranging tariffs, which he says will protect the American worker.
So I was looking at a lot that was saying he was pro crypto, but again, like I was saying before, like I haven't dug that deep. I just know that every single person that he's vetting or that he's tapped already is pro crypto. I mean, he's pro crypto himself. Did you see the news around DJT possibly buying out that crypto exchange?
I saw that. That's weird, but I mean, DJT is not really a real company. I mean, like, I get it. Maybe it was 2 quarters ago they had like $100,000 in revenue, so like the price to sell was like $1 million to 1 or something. It was just ridiculous. So,
yeah.
But it's there's a lot of companies looking at adding exposure to Bitcoin. But I think the biggest one is if you throw up this Tevis. And this is just a rumor. It may not be real, but RFK Jr. talked about this, and he's, on the cabinet there. I don't know Vivek's stance, but I've heard that Trump team is considering an executive order for a national strategic Bitcoin reserve in order to beat any state from passing into law first. I can confirm that U.S. Senate offices are backing this plan up. Game on President Trump. The race is on. And I don't know, if that'll happen right away, but I feel like it's just a matter of time.
Yeah. Go ahead.
Some of the hesitancy, is possibly like, the U.S. dollar is the currency of the world, and so some have feared and thought that the United States reaction towards that, especially using the SEC, was as a reaction of a concern of trying to like defend the dollar. But like ultimately, I think some exposure beyond just like seizing Bitcoin from like drug traffickers is warranted for the United States government, and it's not a bad idea to have that. Now, do you think this rumor is credible, Tevis? And if so, what do you think will happen with Bitcoin?
Look, so I think we're really at an interesting inflection point because every single crypto bull market that you've had different players enter the space. And right now, you have institutions, you have these ETFs, you have nation states. that are starting to accumulate crypto. And I think it's very important the stance that the US takes, because that is going to dictate nation state adoption on a global level from a FOMO perspective. The US is seen as a global leader. More importantly, all the dollars in the world are essentially backed on the USD. And so if the US then creates a strategic Bitcoin reserve, it's going to push a game theory essentially for all nation states rushing to do the same so that they're not priced out of this new market, right? If and I would suspect that a lot of nation states have already begun accumulating behind closed doors, not advertising it so as to still capitalize on the price not having exploded yet, so as to front run the US, because the US has been very vocal in their plans to have a national reserve. But I think if you look at this, so the nation states on one side, and then you look at like MicroStrategy buying 51,000 Bitcoin for 4.6 billion like earlier this week, yesterday, and then Saylor's going around to I think he's visiting Microsoft and Google and others to have them allocate a portion of their balance sheet into Bitcoin as well. So the corporations as a whole allocating just a small percentage. And then you have like the BlackRocks and the ETFs of the world. All of that put together, what that does is it creates a massive supply shock, because I think right now the outstanding supply for Bitcoin is like 1.5 million. The actual new supply that gets mined on a yearly basis, like that is like an order of magnitude less than what the demand is out there. And so what you're going to get is you're going to get this massively diminishing supply, and you're going to get massive new players like on a global level entering the space. And I think if the US actually goes through with it, Trump takes power in January, these new appointments actually have a mandate, and the US makes that move, I think that's going to be a powder keg, because it solidifies that move in the eyes of every other nation state who wants to be a player in that game. And it's only one way that it can go, right? It's going to go up, because you have such a finite, limited supply, and you're not mining more to the degree to meet that demand. And so you don't even have an equilibrium. And so that is just going to drive the price up massively. And then on top of that, you add another layer of FOMO from a retail perspective, or FOMO from, other companies' perspective. And just that like simple economics, right? That supply demand discrepancy, I think, is going to be the trigger to drive it much higher. And countries entering this game is going to be an accelerant to that move.
Can you throw up Matt's comment? Yeah. Bitcoin ETF holdings are up 15% since August, not value. That's the actual number of Bitcoins. It's really interesting to me. So typically, Bitcoin follows this pattern of, of course, bull cycle and then bear cycle, crypto winter. And crypto winter is, by most measures, due at some point next year, probably later next year. I think we still have a ways to run before that. So, but we have the Bitcoin ETF approval, and there's massive institutional buying. We have other institutions, public institutions, beginning to buy. Of course, Block was one of those a couple of 2 quarters ago, I think. But there's others that are talking about it as well, and I think there's some that are likely to actually do that as far as balance sheet exposure. United States government as well, and then we have friendlier crypto regulation from the SEC. Do you think this is going to disrupt that bull and bear cycle? In other words, it'll elongate the bull market for Bitcoin and crypto as a whole?
Yes. I think the timelines are going to, I think mostly it's going to follow a similar pattern, but not so mathematical as it's been in the past. Like something akin to, climate change, where winter is still winter and summer is still summer, but sometimes winter starts a little bit earlier or a little bit later, or it's a little bit more intense, so on and so forth, on different years. And the reason why is because, it already has started to do that. Institutions have front run that, bull cycle essentially, and the accumulation started much sooner, like as early as this summer. And so you had the halving event, when was it? In April, May of this year. And then institutions were already accumulating. I think you didn't really have a new all-time high in Bitcoin until like 6 months after the halving or something like that, like normally. And then this time around, you had it even pre-halving. And so
Oh
you're
yeah.
already seeing that the trends are being broken slowly, that there's weird anomalies in terms of what you can expect. I do think that there will be a natural cycle, of course, but I think as larger players start to get into the space, and then more importantly, as they start to hodl, then what you're going to get is you're going to get a more stabilization of those ups and downs in terms of the crypto winter and the bull market, and eventually you're going to it's going to equalize over the long tail. But yeah, I mean, long and short of it is there will still be a up and down. Like right now, Bitcoin is going up. And so essentially what happens, actually, there's a great chart on this that I'm going to pull up. I have it bookmarked
And
here.
while you pull it up, I'll read June's comment. It's a good one. If Bitcoin goes up and creates money out of nowhere for those that invested, won't that cause more inflation for everyone? It's like the Fed printing money, right? No, it's actually not. So what's kind of unique with the markets, whether it's crypto or whether it's equities, is for most people, most of the gains that they make end up being reinvested. And so it's actually not, doesn't cause inflation unless a whole lot of people are taking the gains out and then using those gains to buy tangible goods, and it's usually not the case. If they do, and if people made a ton of money, usually those are luxury goods, and honestly inflation there doesn't really matter that much. If people are paying 30% more for yachts and Lambos, I mean, fine, whatever. That doesn't really affect the regular person, regular consumer. So it has a very, very negligible effect. This is one of those things that actually was talked about, but it's kind of forgotten back in 2020 and 2021 when, of course, during the meme craze, but a lot of stocks were rolling up higher and higher in that bull market. That was unlike even this one. Like this is a great bull market. I'm loving it, but it feels more stable just because not everything is going up. Towards the end of that previous bull market rally, junk was going up, stuff that had like no actual tangible products, things that, I mean, just the valuations were so ridiculously stretched. And even then, people would take the money largely and not put it into buying like a new Tesla vehicle or buying more food or going on a trip. They do some of that, but mostly it was just reinvested. So, yeah.
So can you see my screen
Yes.
right now?
Mm-hmm.
Yeah. So generally, you're going to see that same cycle repeating itself, where Bitcoin is the thing that moves first. And from an equities perspective, because I entered much more heavily into CleanSpark and into Mara from both a long calls perspective, but also from a stock perspective. And I know we've talked about this in previous episodes as well, is what happens first when Bitcoin starts to pump. You're going to have price discovery when it crosses the all-time highs. And I can even pull it up. Next is Google Trends for Bitcoin. Like it's starting to spike up because more people are searching for it. And what usually pumps first is MicroStrategy because it's like the most direct, holder. And then people try to take the gains that they have from MicroStrategy and cycle them through. And similar story here as well, right? People will try to continue that rally to capitalize on their gains by cycling them to different assets. And that's why you get this cycle of, Bitcoin, ETH, which I think in this rally, it's going to be Solana more so than ETH because ETH is held behind. And then altcoins, which we're seeing, I mean, what was it? Peanut coin is up like 1,500% in a week or something like that. It's insane.
Yeah.
And then you're having, what's that?
ADA, Cardano,
ADA, Cardano. Yeah.
What's interesting about those two, like Robinhood had to remove those, and Matic, several years ago because of SEC scrutiny, and I never understood that at all. I don't. Some of those I didn't love. Cardano I hold, but I'm like, this is dumb. And all of a sudden, like 2 days, I think, or maybe 3 days after Trump was elected, when they saw some of those potential SEC appointments and removing Gensler, they're like, hey, we're going to relist these, and we're going to relist some extra coins as well. And they hadn't, I don't think, listed any new coins at all in like 2 or 3 years. And it's not just Robinhood. I mean, like this just opens up Pandora's box, but in a good way. I can't think of a the right term. So for anybody that's in crypto, like just be careful though. If you are investing in like meme coins, even Bitcoin itself, like it's volatile. Don't put money on there that you can't afford to lose. That's what some people did. Don't be afraid to take gains. And it's not wrong. If you missed out the last cycle and you made a lot of money on paper, but it went back to where square one, it's not wrong to sell and buy something that improves your life tangibly. So,
Yeah.
I'm thinking about another vehicle maybe if things continue the way they are. So,
I mean, yeah, exactly. And the things, like, again, just going back to that diagram, like things move in cycles because people try to move their money out and then go to the thing that hasn't run yet because they think that there's alpha there, and then that thing will run, and eventually it gets to this point where, like, NFTs will start running and all kinds of random coins will start running, like coins that were made last week. And that's when you know that, hey, we're getting toppy here, that maybe it's time to lock in some of those gains, let's say. But from an equities perspective, the reason why I'm buying miners is because, generally speaking, MicroStrategy is the one that moves first, and then miners move afterwards, because miners hold a large percentage of underlying Bitcoin. And people complain about dilution in miners, but if that dilution is spent, money spent to purchase more Bitcoin, then ultimately the miners are going to have a closer direct correlation. They're going to run too. Now, I don't want to get into that rabbit hole because I know we've talked about miners and how we both feel about them. For me, it is very much a trade, but I do think that Bitcoin as a whole can reach the six figures, let's say, very shortly, probably by the end of the year, if not by the end of Q1. You can reach 120, 140, something within that range. Many people are thinking that it can reach much higher, like in the 200,000 plus range. And then we're going to see that, cycle play through, right? Like goes from Bitcoin to the next biggest, like ETH or Sol or whatever. And then it goes to alts, and then it goes to, memes and NFTs and whatnot. And then you're going to enter that, you're going to have a lot of people taking profits and entering that crypto winter.
Yeah, there's seasonality too. September is pretty much always terrible. October is a little weaker. End of the year, though, November, December, it's usually off to the races. But
yeah,
it can surprise you just because things have happened before. Bitcoin always does something that's unexpected to everybody, no matter how bullish you are, no matter how long you've been in it. So the way that I personally treat Bitcoin for myself, I have some that I own, and I just kind of forget that it exists. For that, Ethereum and ADA. ADA is really underperformed, although it's starting to heat up now. And I don't do anything with those. I just let them sit. Two of them are able to be staked, so I stake them. Look up to that. Google that. Look up a YouTube video, see what that is. Because a lot of coins you can stake and gain some extra yield off of that at no risk. But yeah, just know what you're holding, know what you're buying, know what you're doing it, whether it's a trade or just long term. I have somebody I know personally that bought a large amount of Bitcoin, around 67,000, I think. And their philosophy is like, hey, I'll look and see where it is in 5 years. I don't need the money. If it goes to zero, so be it. Probably not going to zero because it's Bitcoin.
There's this like really, I think I shared this with you guys in one of our private chats, but it's basically a clip of Tom Lee essentially trying to convince the CNBC. I think it's Becky Quick, but it might be somebody else, or Karen, what's her face? Anyways, one of these CNBC hosts, and he's trying to convince her to like buy Bitcoin. And she's like, how can you possibly advocate for anybody to hold this in their portfolio? It's so reckless, blah, blah. And he's like, yeah, I know it's dangerous. That's why I suggest maybe 1% or 2% allocation. Like Tom Lee, how he speaks, like cool as a cucumber. And then you see on the screen, Bitcoin's at 5K and it's like 2019. And he's just like, just 1% or 2%. And she's like, this is such a reckless move. Like, I don't understand how you're recommending this to people. And that's, I think, the whole thing. I mean, Michael Saylor's whole thing is that, hey, it is the best performing asset, but only if you really look over the last decade or so. If you're going to look to buy today and then refresh your screen every day for the next week, well,
don't do that.
like
the best, crypto is so volatile. Like at least for me, like the easiest thing to do is just I have some, I'll add to it occasionally, and then I'll just kind of forget it exists. Now, I did trade some Dogecoin for fun, but that was it. And I'll occasionally, like, I put $100 maybe on some meme or something. But
I saw.
but with any like high risk asset, so whether it's crypto, whether it's like biotech, whether it's a company that's just I think has a high risk of failure, but if they succeed, they'll be 100x. I don't want big exposure to that, and you don't need big exposure. But if you feel fairly certain in that, like, hey, risk 1% or 2%. If you lose it, is it going to cripple you? No. If you get it right, is it going to make a difference even at 1 or 2%? Yes, because it has 100x potential. So, yeah, Matt mentions it right there. That's maybe his strategy. $100 a month gets you 1% of a Bitcoin per year at current prices. Just do it. What's the worst that can happen? Worst that can happen is you're out $100. I mean,
I can't find the tweet right now. I'm pretty sure I bookmarked it or saved it or something. It was this guy had broken out like the average cost of a house for the last 10 years denominated in Bitcoin. And it went from like, whatever, 10,000 Bitcoin or something. And now it's like 2 Bitcoin. And yeah, like every year it's going to get cheaper and cheaper and cheaper. And I think Argentina is now like 1-to-1 with Satoshis. Wow. Anyways,
so bad.
Yeah, I mean, it's just a reality. And I think that for me, it's ballooned into, my like crypto's like 15% or so, maybe higher, actually, maybe like 20% of my portfolio at this point. But simply because, I've been buying and holding. I think the first time I bought, Bitcoin was 2018, really small amounts, and I've averaged up ever since. But I just think that every cycle is going to bring new people, and people think that they missed the boat. But then you think that everybody who's bought Bitcoin so far to this day has front run all the nation states that are still staying away. You're still early.
Yeah. And I'm about the same place. I think I'm at 3 or 4% crypto allocation, just like pure crypto, not miners, not Robinhood or anything like that. And I have some physical silver as well. That's about that same allocation. That they're just hedges. That's how I think about them. And crypto is a hedge that tends to go up over time. Silver, it's not. I didn't buy it for going up, which is really good because like it very much underperformed for like a decade. So I've owned it that long.
All right, yeah, Roy, let's give the people what they want. It's been 30 minutes. We've been talking about Bitcoin. What's next on our docket? So we have HIMS, we have Tesla, we have Sofi, and then Celsius. What's the order that we want to go through those?
Well, you mentioned Celsius, so why don't we? Well, let me just share like one thing from PayPal real quick. PayPal has been kind of quiet. Even the stock has been going down recently too. They did have like a big thing that happened today. It's one of my more recent posts on X if you guys want to look up in the details and everything. But there's been a whole lot of stablecoin launches in the last 2 months. There was an announcement with Robinhood and Kraken and several others of a joint stablecoin launched through Paxos, which is also the ones that handle the coin for PayPal. And then there was also a mention of like Stripe actually using USDC to settle some transactions as well. That's a big way for fintech. A lot of companies are going to benefit from that. But for PayPal, they basically gone from being able to use that to actually settling trades internationally. What that is they don't own their own they don't own their own payment rails. And so you can kind of think of it as them having to pay somebody to complete the payment each and every time as PayPal. Now, all of a sudden, because they own their own stablecoin and they can settle, it's basically near instantaneous. It's trackable, it's programmable, and it costs them like almost nothing, especially in the Solana chain, just because it's very, very cheap. So kind of big news there. Now, Tevis, you mentioned that you wanted to talk about Celsius a little bit. So why don't we do that? And then maybe we can talk about HIMS after that.
Sure. So I think right now, and super quickly, and this is just something that we'll, I'm sure, talk about more as time passes, but Celsius is at that place where it's very, I think, attractive from a stock valuation perspective, especially because it hasn't run in the same way that other things in my portfolio have run. My allocation right now to Celsius is still very small. It's like 1%, or even less now. My big bets right now are in the miners, in CleanSpark and in Marathon as a trade. But of course, I'm building up my HIMS position. My HIMS position is now like 6% or 7% of my portfolio. Like it's I think my fifth largest position, like out of everything. But I do think that while Celsius might have a period of time that's going to be somewhat rougher over the next couple of months for two reasons. Number one, I think the next quarter numbers are not going to be as strong as people think, because of how the inventory works with regards to Pepsi and others. Like Celsius reported some numbers that weren't as, like, they double missed essentially, and their growth rates are down, and people are sort of panicking because this was not the company that they thought it was going to be with regards to those growth rates. Meanwhile, we on this show had multiple times mentioned that those growth rates were unsustainable and they were going to come across tough comparable periods, that their growth rates were going to fall regardless, because it was just, you can't keep triple digit growth rates forever, right? So that's number one. I think the next quarter, Q4, is not going to be as strong, although it's going to be plateauing in terms of their growth decline, and they're going to go back towards actually growing again. Point number two is tax loss harvesting. A lot of people have lost a lot of money with Celsius this year, and I think that they were going to be selling for tax related reasons as we go to December. And so I think that we could still see some further weakness in Celsius over the next couple of months, but it's going to become very attractive purchase for me around that time, like after we get the tax loss harvesting, in December, early January, around that time, for me to start accumulating more and build a solid base in the low 20 range. Because I do think that they are going to be going back to growth. I do think that there's a lot of positive catalysts that the company has with regards to international expansion and others. And so it's becoming really attractive. But of course, the numbers are going to dictate that. And there could be numbers that come out that is just completely going against that narrative. I just think that we are getting towards the end of that pain. And you're now getting a pretty good, how can I say, you're getting a pretty good margin of safety with regards to the price that you're paying. But again, like that old saying, cheap can always get cheaper. So it really does depend on what the underlying numbers are for the company. But I foresee more weakness in the stock over the next couple of months, and then it's going to start to stabilize. If I see Q4 numbers, and I think that's probably going to be my trigger, is next quarter earnings. If I see that is stabilizing and management has good commentary and they're guiding for good year-over-year growth rates, then that might be my entry point for me to actually build a bigger position, because I do think it's going to turn around.
Yeah, I'm less certain. I entered Celsius as a trade a little bit before earnings, lost a little money, not much, exited immediately. I think that, some of what ails them is not their fault at all. It's the Pepsi deal. You talked about that a little bit. I know Matt did in his channel as well. And that'll eventually turn around. There's no indication of that, though, yet. The bigger thing that concerns me with Celsius for anything other than a trade, and there may be a point where, and I think you have a great point on tax loss harvesting. Like if it goes below 20, I'll think about it just as a swing. And on the swing, I'm going to have a basically stop loss. I'm going to have a timed exit as well, because I'm willing to lose some money on that trade. I think the risk reward might be there as a swing only. I'm not willing to do the mistake that sometimes happens in retail where you're like, oh, this is just a swing. It's just a trade. It keeps falling. And you're like, well, I guess I'm long now. I'm not going to do that here. Now, the reason is, and we're going to talk about HIMS in just a second. We talked about HIMS last week as far as Amazon entering in, and whether we think that that new competition vector from Amazon, what it'll do to HIMS. Of course, we weren't bothered by it. And when I was looking at HIMS initially, before I got in as a long position, I was asking you and several others, is like, tell me about the competition. And you guys all talked about Amazon too, and Eli Lilly and others as well. There's and Roe and several that are just not even public traded companies right now. And in that case, I felt there was differentiation in the product, differentiation in their model, differentiation as far as a leadership and strategy as well. That's pretty clear in HIMS. And I don't see that with Celsius. Like, the only thing that I see that they have going, well, there's a couple of things. I mean, they seem like they have decent leadership. They have the partnership with Pepsi, which is great. And they seem to have convinced people that they're healthy, even though I don't think that they're healthy for you. But going around in the supermarket, at least maybe it's just a Houston thing, but I go around like in the HEB, or I go in the Kroger, or even in the Walmart, and like every single end cap has some sort of different energy drink, whether it's Ghost or Monster or Red Bull or Rockstar or Alani Nu. And there's a bunch of them now, which are marketing, because of the success, I think, of Celsius, as the healthy energy drink, and like the girly energy drink. There's just so much competition I'm seeing on the shelves, and it doesn't always mean that they're paying less for the product, but that's usually the case. Is when they really want to move something, they'll put something on a pretty deep sell. I've seen energy drinks, not just Celsius, but energy drinks as a whole. And I love Monster. I drink Monster, at least once or twice a week, at a as cheap or cheaper price than I saw like before COVID and all the inflation running up. I think that there is a bit of a margin compression, just because there seems to be a caffeine war, and it's a very, very crowded space. And I just don't see, from trying the product, consuming it, seeing how other people think about it, that there's as much differentiation as there should be. I think that they'll be okay. I just don't think that they'll be amazing. And so I'd rather put myself and my money in something that I think is going to perform well over the long term and has an edge despite competition. And for me, that's HIMS, because I have limited money.
Sure.
Even though it gets to a point at Celsius and it's just like, hey, dollars and cents make sense.
Yep. So I don't disagree with a lot of what you're saying. I do think that there's, like, if all you're looking at is the growth rate as like on an absolute, there is better spots for your money. I'll say two things. Number one is, even if Celsius is going to be, like, to use your own words, it's going to be okay, you're paying a price as though it's like, going to go bankrupt essentially. And so just that difference in terms of what the expectations are with the price that you're paying and the results that they're going to report could lead to some pretty significant returns. The second thing I'll say is that you could always hedge in some ways, and this is all, of course, risky, but like, this is probably what I would end up doing is, okay, I don't want to be in Celsius over the long term. I'll just put a set amount of dollars in leaps on Celsius at, $20 a share or $25 a share, whatever it may be. Whatever it is by the end of December after the tax loss harvesting, great. I want to buy 2027 leaps, and I have limited downside because that leaps can go to zero, sure. But then you can cover their upside on that, and you can do it in a very cost-effective way where I don't have to put 10 or 20 or 30 grand into Celsius. I can put maybe $2,000 in leaps and cover it that way. And I know you've done that strategy in the past on different companies.
Yeah,
mind.
I have to push back on you there. Throw this up, please. You mentioned that Celsius is priced for bankruptcy, and it's like PayPal was just about back in the day when it was trading at like $50 a share.
Yeah, I mean, that's just an expression.
Price to earnings was under 10. Like it just was. The price for free cash flow was like 11. Celsius is not there. It's not nearly there. I know what you're saying, but like, look, the PE is 37.86. Like, that's not cheap. You can buy, I think you can buy Google for less. Let's throw that up. Yeah, 23 is Google. Is Google priced for bankruptcy? Absolutely not. You can look at price for sales. You can say, okay, well, maybe that's not forward PE. Forward PE is 37.35, just because analysts are not thinking that they're going to grow very much. Price to sales is 4.67, which is still quite high for a beverage company. The thing is, Tevis, like, unless the analysts are wrong, and they absolutely could be, it is actually very expensive here, especially with the growth that's baked in. I would much rather, I'm not a huge fan of Google. I've warmed up to it. I would much rather buy Google right here. And they are not priced for bankruptcy at all.
Yeah. No, I get you. It's just an expression. I don't mean like literally,
Yeah.
price.
I know you didn't mean that literally, but in case somebody was taking like what you said, and like, hey, it's priced like it's like on sale and everything. It's not. Like, just be careful with those expressions. So,
okay. 45 minutes into the show, about 177 people here. Shall we go into the main course, which is either hymns or SoFi?
We have Tesla too.
We do have Tesla as well, but
okay,
let's get through hymns or SoFi, and then we can end with Tesla.
Can we do like very brief on SoFi?
Sure.
Okay.
I don't even know what we're talking about on SoFi. I mean, I think that, so I made a video earlier today on SoFi, and basically the gist of that video, if you guys haven't had a chance to check it out, then definitely do that. But the TLDR version is that SoFi right now is at an interesting spot. And so in that video, I was basically looking at the short interest, which is still at 15% for SoFi. It went down slightly, but still at 15%. I was looking at the institutional ownership, which is climbing. It's over 50% at this point. And then I was looking at analysts' upgrades, which, I mean, Dan Dolev just earlier this morning upgraded SoFi to $16 a share as his price target. All of these things are symbiotic in nature, and they all contribute to a virtuous cycle in the stock, because as institutions pile in, as analysts raise price targets, short interest is going to go down, so on and so forth. And that is going to lead to a re-rating, or at the very least, a reimagining of the narrative. We saw Anthony Noto on Kramer talking about how, I mean, he flat out said, we are not a lending company. Half of our revenue came from non-lending sources. And so that the company is more than just that. They talked about the loan platform business. They talked about, student loans. They talked about the robo-advisors and what they're trying to do there. I think as that narrative is pushed more by management, and I think as the fundamentals are strong and continue to be strong, then you eventually are going to have the market reevaluating and re-rating what SoFi is going to end up being. Right now, $14.50. A lot of people have been asking me about the capped calls, to the point where on X, I reposted a video that I put 8 months ago where I walked through and whiteboarded the capped call transaction and what that has, the implications that it has for dilution, and the move that management made with the 2029 senior convertible notes. Please go back, watch that. It explains everything that you need to know and why that $14.54 range is important. And so I do think that we're coming up on some interesting pieces here. Interestingly enough, my price target at the beginning of this year was $20, and I think that that's still my price target right now. I do think that we could hit that. Whether we do or not is in the air, but I do think it's within the realm of possibility now, more so than ever before, because of all of these things working together to change that narrative. And the telling factor there, just to finish up that thought, is that we are not only running, but we are forming new bases as we run. And so you're running, you're catching your breath at $13 or $11. Then you're running again to 14, you're catching your breath at 13. Then you're running again to 16, you're catching your breath at 15, so on and so forth. And that way, it's a much more sustainable stair step upwards, as opposed to what we have been doing over the past 3 years, which is pumping and dumping, essentially.
Yeah. And we went over this in the SoFi Weekly, but institutional ownership is up substantially. S&P 400 inclusion was probably one of the factors. When stocks that are very retail owned enter into an index, there's a lot of institutional buying, versus if it's heavy institutional, there's not usually that much. So it's a good time to own SoFi. So We'll probably save the rest of SoFi on for SoFi Wkly this Friday. Join us for that conversation. But yeah, it's crazy because I think the bottom, Tevis, was right when I said, hey, I've had a lot of things right this year. It's been great, both the ups and the downs. It's probably my best year as far as that. But my biggest miss was predicting that SoFi would be in the 20s. I think it's 20 or 21. I'd have to go back and see what I was predicting. But it was at like $7 when I said that. I was like, yeah, it's not happening. I was wrong. Why was that? And I had this long, lengthy post like I always do. And then right then it started running. And there was a few people that commented, they're like, well, maybe it will get to 20. I'm like, no, I won't get to 20. And now I'm starting to think, we're not that far away. And the Santa Claus rally, what's happening as far as, well, okay, so like just one other little piece is there's been exceptions. Robinhood is an exception because they're exceptional. And frankly, like they're one of the big winners from the election. But for the most part, fintech has been shot and left for dead. They have been in a bear market in that whole industry, and it's lasted much, much longer than I thought. Part of that is rate cuts, but that's not all of it. It's no longer the case. Almost every single fintech is up dramatically over the last 3 months, SoFi included. SoFi was ridiculously undervalued, and so I put a much larger allocation percent than I thought I was going to because I just said, like, it's on sale. I'm done buying SoFi. Nope, it's stupid cheap. I'm just going to buy more. Glad that I did. We're out of that now. We're off to the races. We're in price discovery mode, even though it has been higher. I'm in it for the long term, so the short-term price doesn't matter too much. It's only like really fun to know like where you sold your covered calls, so we know where we're going. So what are your covered call strikes at for this week?
I do own 15s, so
All right.
I will not be publicly advertising my covered calls because you guys have formally lost that privilege, you assholes.
So 15s. So we're going to see 15 by the end of this Friday.
Friday.
It's almost guaranteed.
That's like, take it to the bank. It's as good as gold.
Could you sell some 20s for the end of December? Just a few.
I did think about that. I actually looked at that I looked at December 27th strike for expiry for $20 strike, just because Chris posted something around like Kramer said, it's going to go to 20, so it's not going to happen. And I wanted to post back like, oh, I'm going to counteract that. But then I was like, I don't want to actually do this just for a Twitter joke. Like, this is so stupid. So I thought about it.
Here's what you do is you buy 100 shares of SoFi and then you just sell on that one, the covered call, for 20. You're not going to be too sad if it runs up there. So
no, that's true. I won't be too sad, but yeah, I might do it. I've just been sticking to weeklies right now, and that's been working out well for me. But I don't really do it a lot with SoFi because the premiums are just not worth it, and you don't have a lot of, well, first of all, the premiums are not worth it because if I go out to, 15.50, whatever, by next week, it's like 10 cents or less in terms of premium. And meanwhile, you go to HIMS and you go out, like, I went out with HIMS like $6 and the premium was still like $1.
Those premiums, like Robinhood has good premiums too. The one thing with HIMS is like there's just not a lot of open interest, so it's hard to get the best fill.
Yeah.
On most strikes. On monthlies, you usually can. That's the third Friday each week, or not each week, each month. Since you're newer to options, I'm telling you this, Tevis. You'll almost find that if you can't find your strike, if you have too large of a spread, just look for that third Friday in the month, and you'll find it on almost any. I mean, not some like real speculative small names, but like on something like HIMS, you will. Yeah, I've sold. So let's pivot to HIMS then.
Yeah,
HIMS had a colossal dip. We talked about it last week. Just a quick recap: Amazon is entering the space. I won't even throw that up. Of HIMS, they are a direct competitor now versus before there was a little bit of overlap. They don't have all the products of HIMS. They don't have all the features of HIMS. They don't have the personalization. They don't have MedMatch. These are really, really big deals. They're differentiation. We talked about it last week, but I personally think when Amazon enters a space, usually they are extremely destructive for weaker players. They're like wolves being introduced in an ecosystem. Wolves tend to hunt prey that is sick. that is weak, that is really old or really young. Hims is none of those things. Hims is a giant buffalo out there, and it's not too scared of wolves. So I think Hims will be fine. Like it does hurt them a little bit, but the market sold off Hims really hard between that and also some FDA concerns with RFK being potentially appointed or Trump's appointment to the FDA. It looks like that's a sure thing. Whether he is approved or not, I think it's likely, but we'll see. But it sold Hims from above 30 to under 20. I sold some cash secured puts. I'm happy with my position, but I was like, hey, if it wants to go to 17, I'm buying a lot more. What did you do?
So I didn't know that this was an actual thing. I don't know if it is a thing or people are just messing with me. But so on Friday when Hims fell, I bought shares. I bought long calls, like leaps and December or January 2025s, and then I also bought 2027s. So I really loaded up, and then I also sold cash secured puts, and people were like, "Oh, you did a tricycle." I was like, "I don't know what that is," but I basically bought it in every which way you can imagine. I sold
bullish. Every single one of those is bullish.
I sold 36 cash secured puts at 17. That's about 60K. And then I also sold more at 23, like in the money, for extra premium, which kind of dangerous when you're doing it at $20. You're writing it at 23 for next week. But I was just banking on, first of all, I didn't really mind owning it at 23. I was happy to do that. And secondly, I was banking on a quick bounce back, which I was very happy that we have gotten over the past couple of days, because I just closed the cash secure, and I posted a tweet about this earlier today. Like I closed my 17s because like I opened them at 50 cents premium and I closed them at 10 cents premium. So about 70 or 80%, 75% gains there. But that was from Friday to today.
Throw up this chart while you're talking. Just like to
And
show people, like it's so volatile. Like
it's just, dude, it's insane. I love it so much because it can go up or down. Like it's just exciting, you know? Yeah. So I think that it was an overreaction. You know, I think Hims is incredibly news sensitive as a company. And so whenever news comes out, it's going to react up or down. I mean, it's just moving up or down 10%, even without the news at this point. But I do think that it will regain that previous level that it had. And I do think that that will come relatively soon. I did write covered calls on Hims. I wrote, I think 28. Let me just check for you. I wrote 27 calls for expiry this Friday. And so we'll see. I still like, it's insane that I even got the premium that I did. I got 30 cents premium for those. And the stock is at 23. And you have what, 3 trading days? And then like, I'm scared that it's going to get hit, honestly.
Oh, yeah. No,
but if it gets hit, then it gets hit. Then I might roll them, or I might just let them get hit, honestly, because I added quite a bit on Friday. And if it gets hit, then it's like a tremendous return for premiums on both sides and the appreciation that you get in between. But I know I'm just talking about the sort of stock price action. I think the underlying company is going to be fine. I think Amazon entering the space, like after having had some time to think about it, a lot of the posts on X that I'm seeing are more grounded than people just panicking. I do think also that the sentiment is driven largely around that price. Like it's down 30% on the day or 25% on the day. People think that the sky is falling. And then, when it's up 10%, people are like, oh, well, it's probably not that bad. It was probably an overreaction, and so, but Hims did also fall on that Eli Lilly tirzepatide news. And that's what made me basically say, wow, this thing is incredibly news sensitive. But what we've learned is it bounces back fairly quickly.
So
So we'll see.
So a couple of pieces of news with Hims beyond stock price action, because it's it's a real company, and I think the products are very differentiated. I've done a video going through this. I might do another one too. You've done some videos. I have some very detailed posts that if you're not in Hims, you're going to be like, oh, this is really boring. But comparing like the offering of Hims and Amazon. But two pieces of news. So one is I believe it's tomorrow, actually, this Thursday. FDA is making a determination on Eli Lilly's product for GLP-1, whether it remains on the shortage list or not. Based on social media traction, based on a couple other factors, it seems like it's likely going to remain in shortage for the time being. What this means for Hims is that they can continue to compound GLP-1, which gives them a lot more revenue. It does hurt margins just a little bit because it is not their product necessarily to sell. Eli Lilly certainly doesn't want that, but they don't always get what they want. And frankly, the demand for GLP-1 is to the moon right now. Like, it's off to the races. They cannot make enough and manufacture enough. Now, the other piece of news as well, throw this up, please, Tevis.
So just before we get on the other piece of news, can we just pause for a second on the Thursday news? Because I did see this and I shared this with you, and I really want to play this video.
Yeah.
Because I think it's an interesting conversation. So, like Roy said, Thursday is going to be an important day for Hims because the determination is going to be made on that shortage. And we know that Hims fell when tirzepatide was basically taken off the shortage list. But this is really interesting. So let me see if you guys can hear this.
Zepbound and Mounjaro, and because they were sitting on sellable doses of Zepbound and Mounjaro.
That video was from a couple of weeks ago. This is why you follow On the Pin, because even now the experts are starting to catch up as to why Eli Lilly was able to remove Zepbound from the shortage list. In today's article from the Wall Street Journal, they posited whether Eli Lilly and Novo could actually meet demand in the face of copycats or compounded versions going away. And in talking to experts, they could have just talked to me 2 weeks ago, they guessed that or speculated that Eli Lilly might have decided to stockpile supply and hold off on consumer advertising to ensure they could adequately supply excess demand once the medication was removed from shortage. Well,
that is very interesting to me that they would just stockpile the supply to be like, hey, we're not in shortage anymore. And then take that off the shortage list, because when it's on the shortage list, then basically like everybody can contribute and make money off of it. Whereas where it's not, then Eli Lilly has the patents on it, right?
Yeah, I think that they're really pushing for going off the shortage list now. If RFK Jr. is the head of Health and Human Services, which is over the FDA, he is very anti-big pharma. Very. Like, that's not going to be great for Lilly. Hims should have no problem, actually. He might actually benefit. I'm not counting on that. I think it'll be kind of neutral towards him. And eventually the GLP-1 revenue is going to go away, like barring something really weird happening.
Right.
So, but it's temporary. It's a temporary tailwind. It's nice to have. I think, so expect, what I'm saying is tomorrow, if you're holding Hims, expect volatility. Of course, you should every single day as a Hims shareholder. It is like, I have so many volatile stocks. It's more volatile than anything else I own, including crypto.
Hold on a second. Like, again, just putting the pieces together, right? This thing is incredibly news sensitive. And so either way, it can move up or down in a dramatic way, regardless of what the decision is on Thursday. And so you're essentially taking one side of that trade or the other, depending on what you think is going to happen with regards to that decision, especially because this thing reacted so negatively when the initial news came out, even though they really didn't have, first of all, we knew that it was going to go off shortage eventually. But second of all, they didn't really have any implications to tirzepatide at all. And so there is then a possibility, just using that same logic, that this thing flies on Thursday if it is continued to be on shortage.
Yeah. I mean, you can see, like, we already looked at the stock price. I won't bring that up. Overnight, it is up, in case somebody's curious, just slightly by another 17 cents. So no big deal, but it's like 12.5% today overall. And that's not like a crazy day for him. It can fall 20%, it can go up 20%. Like, it gives meme coins a run for their money. Go ahead and throw up the other piece of news that's related to HIMS. They announced this November 18th, so that would have been yesterday, that they have 2 new hires. One is from Pfizer and Hillrom, quality executive, which HIMS does their own compounding. They have their own pharmaceutical facilities, so they that's one of those things they have to be very, very careful with. If I ever see them like slipping as far as quality, that there's a lot of issues that they're having with that, I'm going to rethink the thesis, because it is key for HIMS in the industry that they are to continue with that excellence, and I think that they will with this hire. And they also hired Deb Otter, a former deputy commissioner at the FDA. Do you think that hiring somebody that was very high up in the FDA will help them with FDA regulation and compliance, Tevis? Softball question here.
I don't know why you would ever think that, Roy.
I mean, just speculating here, that could be quite bullish for HIMS, and it's really ironic because some of the pushback against the compounding of GLP-1, Novo Nordisk was one of these. They said, hey, it's dangerous, not just it's sketchy, it hurts our business, it's not fair, but they said it's actually dangerous that other companies compound because they don't have the same quality control that we do. And then I think the next day FDA slapped them because they're like, hey, there's all these compliance issues you guys have, so don't mess with us. I mean, the timing was very suspicious. I don't particularly like that, but it was just ironic.
The timing has been suspicious on a lot of like HIMS moves. Like even when it fell on the Amazon news, it was immediately after. So you got to keep in mind here that this is a company similar to Sofi with high short interest. It has short interest in the teens, and with Amazon, with the Amazon news, it reached the all-time highs across 30, and then the Amazon news came out, and then the Bank of America lowered their price target, and apparently it came out that the person, like the analyst at Bank of America who lowered the price target, quote unquote, hasn't been working at Bank of America for like a year, and it was just like a recycled thing that they posted, and it became like this whole thing, which then led to people sort of speculating on whether this was manipulation or whatever it may be, just because the events themselves are kind of shady.
Yeah. It's odd. Actually, Wesley brought up a pretty fun point. So throw this up real quick in case somebody hadn't seen Jeff Bezos in a while. He's certainly more muscular, but would you rather invest in a company who has hair loss products from Amazon and the former CEO looks like this, or this right here?
It's Andrew.
Yeah. Oh man. I was like, there we go. I mean, like it's still like, I don't know, genetics and everything. That's probably the case. But like, honestly, like, come on.
Yeah, I mean, we've turned into a full tabloid now on this show. We are the BuzzFeed of financial news. But look, going back to the new appointees, it reminds me of when SoFi brought on their board somebody who was with the New York Fed for like 20 years or something. Do you remember that, Roy? It was earlier this year. It's obviously strategic for them to have. But the other thing to keep in mind is that, like, yes, they are bringing a top tier leadership team on board. What with Dr. Shepard and others, like what that we've seen over the past couple of weeks. But at the same time, a board seat is more influential. It's more of an oversight role. It's more advisory in nature. It's not really somebody who's going to help them on a day-to-day basis. It's like if they want to make an introduction or if they want to help, with some documentation or something like regulatory, they would be a strategic asset for them. It's still very, very good, but it's not like, him hiring a new, CMO, for example, which is what they did a couple of weeks ago.
Maybe a little bit of Tesla. Let's end on that right quick. And I think, there's a lot of Tesla stuff. Elon Musk said some interesting things. I don't know that we'll play that video. about Optimus AGI in 2026. Elon Musk timelines. In the price, but I mean, that's all speculative. One thing that is speculative, but maybe not quite as much, is this right here. Trump reporting, there's a report that came out that Trump wanted to relax US self-driving rules. And there's been a couple of different sources on this over the last couple of days. It's maybe one of the reasons why Tesla has been running. Certainly doesn't just affect Tesla, affects Waymo as well, as the bigger contributor there. But a lot of these regulations are handled statewide. But if there's a green light from the federal government that allows a certain number of autonomous vehicles on the road without needing extra regulation for that, I mean, it's just going to be very, very good for Tesla, because I mean, it is all about automation. FSD is pretty close. My subscription, my free trial ends here in a week or so. I'm not going to pay the $99. It has some issues, but overall, like I know where it has issues. I know where to like pay extra care. The rest of the time, I don't do this, but I could just sleep, and it would take care of me. I think it even avoided one collision for me at one point, maybe 2 or 3 weeks ago. That I have very quick reaction. I'm a very good driver. I've actually only been in a wreck before where somebody hit me from behind, and I was at a full stop, so it's hard to avoid that one. But no, I did not have the reaction time to be able to avoid somebody swerving to me really quickly, but the Tesla did. So still needs to improve some. I'm questioning whether it can on the hardware stack 3 or not. Excuse me. But a lot of people, especially in the hardware stack 4, have been incredibly impressed by it. And supposedly, unsupervised full self-driving comes for Tesla in Texas and in California this next year. If that's the case, would be a subscriber at that point.
Yeah, I think 2 things that we want to talk about with Tesla, because I know we're a little bit over on time. But the first thing is that we're seeing firsthand how the link that Elon has to the administration, or the bet that he made with regards to the administration, is starting to pay dividends. He congratulated the new Secretary of Transport. A lot of regulatory doors are going to open for Tesla, whether it comes to full self-driving approvals, and just overall, I think, ending some of the lawsuits that the government has against Elon's companies in general. And this, news around full self-driving and autonomy in general drove Tesla stock price up yesterday, and it was up again today. And I think that it's going to be an environment where, similar to how Anthony Noto was saying, hey, since I joined Sofi in 2018 until now, we've had headwind after headwind. We've faced the worst economic conditions that we can for our business and thrived. Tesla's done the same. It's had an administration that has been super pro-union. It's had all of these headwinds from a regulatory and a legal standpoint against them, and trying to help other competitors. And now they are going to be having sort of more tailwinds from a macro perspective. And that, I think, is the thing that a lot of investors are picking up on and buying Tesla, not because the fundamentals changed overnight, but because the landscape did.
Yeah, it's with pretty much all the companies we talked about tonight, the landscape is getting a lot more clear, a lot more favorable, which market loves certainty. Market loves when there are fewer hurdles that are perceived, and it's rewarding most of these companies as a result.
And then the last thing, I think, do we want to play that clip of Elon during the gaming session where he's dropping some nuggets of information?
Nah. I mean, you can. If you want, I'll play it. But you want me to throw it up?
No, it's fine. I know we're over on time, so maybe we can save it and talk about it another time.
Yeah, it's longer range stuff. It's mostly Optimus, AGI, AI, interesting stuff. But
cool. Yeah. So let's save that for the next episode. I think we covered good ground. We talked about Celsius, we talked about HIMS, we talked about Bitcoin, we talked about Tesla, and we talked about Sofi.
And Palantir.
And yes, he did manage to squeeze in Palantir. Yeah, it's. I had a friend actually who who saw Palantir at like $60 and he's like, I'm gonna like this is way too good. I want to start shorting this. And
Oh
he
man.
was saying you should do the same. And I was like, man, at this price, I am not touching Palantir with a 100-foot pole on either side
Yeah.
because this market is so irrationally exuberant that I don't have the balls, frankly, to short it at 60, even though like my brain is like, yeah, you probably should. But I also don't have the balls to buy it at 60. Like I'm just like not touching it at all. And I'm just a spectator very far away in the sidelines.
Yeah. In January, I mean, like if it stays up here, I'll probably exit and sell some of my shares. The long-term thesis has actually gotten even sweeter. I would like to lock in some gains though at this level. So, and I have covered calls underwater, so that's part of the pressure. And if I'm doing that, like that can tell you, as I had no intention to do that over the next 10 years, there will always be a core position of Palantir that I'll just forget. I'll treat it like my crypto stuff. I'll just be like, hey, it's there. I'll check where it's at in 10 years. I'll sell covered calls on it very carefully. Like right now, if I had any shares left that weren't hadn't sold covered calls, I might look at like selling 95s. Like look at this sometime, Tevis. Like selling 95s for the end of the year.
Yeah, the premiums.
Like it shouldn't be worth anything, but just because of IV, just because of speculation. Let me actually look at this real quick. Trade options. Let's do December 27th.
I think Garcia made a post about that. Like the 90 somethings were like 30 cents or whatever in premium.
Yeah. Probably you guys can't see this. No, you can't at all. 95. Well, actually, yeah, 99 calls for December 27th. So this is a month and a half away. Are worth 25 cents.
Yeah. What's the percentage difference between where it is now and that?
That is 37% higher.
Yeah, so basically 37% in a month.
No, more than that. It's 50 something percent higher.
Even
in a month and a half. A month and a half. Like
it's not a month and a half because it's like under 30 trading days until the end of the year, by the way.
That's true. Thanksgiving, Christmas holiday. My goodness, man.
And like, weekends, so like it's just
crazy.
Kind of crazy. Yeah.
In both sides of it, like stocks that are moving up and down, that have a lot of interest. IV is very, very high. The premiums are there. So I'll also say be careful on the other side too. If there are people that out of speculation, if you know what you're doing, you do you. Be careful about buying calls. They are very expensive for Palantir right now just because of that high IV. So
look, I think even the more rational investor, someone like yourself, I think it would be prudent to take some profits off the table. It's sort of that thing of like not getting married to your positions, because like the parallel for me is Sofi, right? Or Tesla or whatever. And I think one thing that I really love about this wheel strategy that I'm doing is it forces me from time to time to lock in some profits. And I have locked in profits on Tesla this time around because I didn't the last time it was here. And with Sofi, I mean, you won't find somebody more bullish on Sofi than myself. But at the same time, like, if Sofi were to go to 20, 25, 35, 40, you best believe I'm locking in some profits. And I think that any Palantir investor who has written this thing from, $6 to $60, first of all, pat yourself on the back. Good for you. Absolutely, fantastic. But second of all, if you think you're going to ride this from 60 to 200 and not take any profits off the table, like I just think that, yes, it's admirable, but it's also kind of risky.
Yeah, no, and I've sold covered calls. I've taken some money off the table that way. I had leaps that I took profits off, and I'll sell. It's not even going to be the majority of my position, but if things hold, and they may not, may fall back in the 40s. I don't know that it'll fall below 40, honestly, because there are some fundamental reasons, not as far as like the PE or something like that. Like it's always going to look expensive, but it's expensive for a reason. Right now, it's very expensive. I had somebody ask me about buying Palantir the other day, and I'm like, hey, you do you. If it was me and I didn't have a Palantir position and I was using money that I could afford to lose and I had a 10-year horizon, I would buy a little carefully. Maybe just start DCAing like $100 whatever their equivalent amount is. I was not saying that in the 40s, if you remember. You guys are like, you're crazy to be, but like, look at it where it's at right now. They're fundamentally fantastic company. Even if it gets to $100 a share, I'll still own a good chunk of Palantir. But it's okay to lock in profits, especially like these are long-term capital gains for me. And like I said, if things continue the way they're going in my portfolio, I'm gonna have to think about that new Tesla. So it's okay to enjoy life. It's okay to take some money off the table, especially if it's something that makes you happy, that improves your life, that your wife really enjoys. Like I've not told her that at all, that I'm even considering doing that. So that'll be one of those. We've already talked about it. I've always dreamed about doing this. I've never done this, Tevis, and I hope it happens just for this reason of just like ordering it and then it just shows up at the door, and I'm like, hey, we got something for you, and just being able to provide that for my wife. So
make sure you can record that moment, because that'll be premium content. Now that you're a YouTuber, I mean.
Yeah, I mean, not just for content, but like the memory of that. Because I mean, I'm not like you made of money. I'm okay.
Don't be Tanner. Don't.
But just being able to do that for a loved one, like I love doing that sort of thing. So, and I'll get to drive it some. So, so we'll see.
Note to end on.
Yeah.
Thanks everybody for being here. I really appreciate it. Catch us next week on the Bootleg Weekly podcast at 9 p.m. Eastern on Tuesdays.